So, good morning, everyone. So, in continuation to suggested answers, let's see question number 3A. The following ratio and information related to the business of ABC Limited. So, they have given credit period allowed to debtors, inventory turnover ratio, lag in payment to suppliers, gross profit ratio. So, opening inventories, gross profit for the year end 31st March 2024 amounted to 3 lakhs. So, we need to calculate. Based on this following assumption, assume that all purchase and sales are on credit and closing values of debtors and creditors are not different from the opening balance. So opening and closing balance are same. So we will be getting that average also will be same. So calculate sales. So first we need to calculate sales. So we have the following information, that is gross profit ratio 25%. Usually gross profit will be calculated based on sales only. That is what we will write the formula gross profit ratio. Gross profit divided by sales, right? So here sales will be 100%. It is my base, so it will be 100%, and gross profit will be 25%. So if this 25% is equal to 3 lakhs, that is gross profit 25% is equal to 3 lakhs, then what will be my sales? That is 100%. So I need to calculate this one. So sales is equal to 3 lakhs into 100 by 25. So just I am doing a simple cross multiplication. So I will be getting 3 lakhs into 100 by 25. So 12 lakhs. So my sales will be 12 lakhs. So here they have told all purchase and sales of on credit. So this entire 12 lakhs will be on credit sales. So now I want to calculate. I have calculated already sales. Now I want to calculate some data. So let's try based on some other information available. So we have credit allowed to debtors is 2 months. So closing debtors is equal to 12 lakhs. That is credit sales. This is a shortcut formula into credit period allowed is 2, right? So 2 divided by number of months, 12. So we will be getting 12 lakhs into 6, 1 by 6. So that is 2 divided by 12. So we will get 2 lakhs as closing creditors. Then closing inventory. So again, I will search based on some other formula. So closing inventory turnover ratio we have. So inventory turnover ratio is equal to cost of goods sold divided by average inventory. So here cost of goods sold we can calculate it is we have sales, gross profit, everything. So we can calculate cost of goods sold. So cost of goods sold is equal to sales minus gross profit. So that is 12 lakhs minus my gross profit is 3 lakhs. So I will be getting 9 lakhs as cost of goods sold. So inventory turnover ratio is 8 times is equal to 9 lakhs divided by average inventory. So my average inventory will be 9 lakhs divided by 8. So I will get 1,12,500. Here in this question, we have opening inventories as well. So here I am having opening inventory. So what is the formula for average inventory? That is opening plus closing divided by 2. So here we have opening inventory as 1,05,000 and closing is 1,12,500. Average is 1,12,500. So average inventory 1,12,500 is equal to 1,05,000 plus closing divided by 2. So I will be getting 1,12,500 into 2 is equal to 1,05,000 plus closing inventory, right? So 1,12,500 into 2, that is 2,25,000 is equal to 1,05,000 plus closing inventory. So this 1,05,000, if it is coming this side, this should be minus. So minus 1,05,000. So minus 1,05,000. So I will be getting closing inventory as 1,20,000. So my closing stock or closing inventory is 1,20,000. So then what we need to calculate next? Sundry creditors. So sundry creditors, for sundry creditors we have lag in payment to supplies 1 month. So they have given payment to supplies 1 month. Okay. Fine. So here I need to calculate purchase. So purchase, all the purchase or on credit basis only. So that information I have. So is it possible to calculate purchase? So it is very simple. We can apply my trading account itself. If you don't know the formula, you can simply substitute all the values in your trading account so that you will be getting. So my cost of goods sold, I already calculated cost of goods sold, right? So cost of goods sold is equal to my opening stock plus purchase minus closing stock. This is my cost of goods sold. So here we already calculated cost of goods sold as 9 lakhs. So 9 lakhs is equal to opening, one opening stock is 1,05,000. So here purchase I don't know, and closing stock is 1,20,000. So for purchase, so what we will do, we will solve everything together. That is 9 lakh minus 1,05,000 plus 120. So I will be getting purchase as 9,15,000. So purchase is 9,15,000. So now I'm going to apply Kurta's formula. So that is purchase into my Kurta's turnover ratio. That is here we have lag in pay lag in payment of suppliers 1 month. So based on this, I can apply. So into 1/12 average collection period divided by number of months. So I apply this. So 9,15,000 divided by 12. So we will get 76,250 as creditors. That is closing creditors. So here closing and average is opening is same. So we can simply do in this way. Instead of substituting all the formulas, we can use in this simple calculation. So what is if we want to use the entire formula, that is creditors turnover ratio calculating and average. So average will be same because our opening and closing is same. So average will be same. So that's why I can use this simple formula. So that's all about question 3A. So this is a quite easy question, I guess. So let's move on to illustration 3B. So here, the following information has been provided by B Limited for the year ended 31st March 2024. So sales for the year 96 lakhs, cost of goods sold 75% of the sales. Fine. Trade payables 2 lakhs more than the balance on 31 March 2023. Opening inventory was higher than the closing inventory by 1 lakh. So suppliers were paid 71 lakhs during the year. Operating expenses, taxes paid during the year. So the company paid equity dividend 2 lakh 40,000. The company acquired a land for 8 lakh and bought a new machine for 4 lakhs during the year. Interest was received, cash and cash equivalent, and this is on opening cash balance. So this is opening and this is closing. So now we need to prepare cash flow statement. So we need to prepare cash flow statement based on cash flow from operations, funds, and investment. So we need to first calculate what is investing. First, we need to know what is investing activities and what is financial activities. So then only we can apply in this cash flow statement. See, if I am paying to suppliers, so without this, I can't run the business. So this will be covered under operations. So operating expenses, again operations. So taxes paid during the year. So this is paid for my business. So this also will be covered under operations. The company paid equity dividend. So dividend that is paid for our shares. So without this shares is used for my financing purpose of my business, right? So by using this funds only, I'm running the business. So this comes under financing activities. Fine. So I am acquiring a land. That means this is an investment. So new machinery and land are investment activities. Interest was received on investment. Again, this is an investment activity. See, if I am putting some money in X Limited, so that is my investment. Okay, that shares is my investment. If people are investing in my business, that comes under financing. So there is a difference between both. If I am getting interest or dividend over that investment, that also will comes under investment activity only. So closing inventory, this and all fine. So we have sales, the cost of goods sold. So everything will be coming under my operating activities. So let's calculate this. So now I need to calculate first cash flow from operations. That is based on the given information. So we have sales as 96 lakhs. Then cost of goods sold, we have 75% fine. Uh, but we have here payment to supply itself. So directly I can go for that information. I don't want about cost of goods sold and all. So let's take payment to suppliers. That is 71 lakhs. So I'm reducing this. So I will be getting 25 lakhs less operating expenses. So operating expenses, how much we have? 7 lakh 20,000. So operating expenses 7 lakh 20,000. So I will be getting 17 lakh 80,000. So here I want to reduce my taxes. So I have paid taxes around 3 lakhs. So together 14 lakh 80,000. This is after taxes, cash flow from after taxes. Now cash flow from investing activities. So here, what we have land. So for land, we have invested 8 lakhs, and for building, we have invested 4 lakhs. So this is all outflow. So land. So outflow is should reduce this outflow. So new machinery. That is 4 lakhs. So we have an interest received on investment 20,000. So this is an inflow. So we need to add this. So interest on investment received, that is 20,000. So I am going to add this. So together I will be getting 11 lakh 80,000 as my outflow from investing activities. So now let's move on to cash flow from financing activities. So here we have paid dividend of 2,40,000. So apart from that, we don't have anything else. So dividend paid 2,40,000. So this is an outflow again, so I need to reduce. So together I will be getting, so 14 lakh 80,000 minus 11 lakh 80,000 minus 2 lakh 40,000. So I will be getting 60,000. So this 60,000 is called net increase in cash and cash equivalents. So here we need to add opening. So we have opening cash balance. So we will be adding opening cash and cash equivalents. So how much is the opening cash balance? It is 80,000. So I'm adding it. So the answer which I'm arriving here should be closing cash balance, and it should match with my versus. So here I'm arriving 1,40,000. So this should match with my question orders. I would have committed some errors, so I need to revalidate. So it is matching. So closing balance is matching with my answer, that is 1,40,000. So that's it. So this is also a one simple question without much calculation. So I guess we can score 7 marks very easily. So thank you for watching this video. So please subscribe my channel and continue watching for more questions in this question paper through my playlist. Thank you.